Hi, welcome back to the channel. This video is another update on the situation with regards to the Russian invasion of Ukraine. And in today's video, I want to focus on the impact of this crisis on Turkey. If you follow the channel, you'll know that we've covered Turkey in a lot of detail, and Turkey is in crisis right now. We saw a 44% fall in the value of the Turkish lira in 2021, and inflation is out of control in the country. It's now above 50%, and it's rising month on month. And one of the problems that Turkey has is that it's a net importer of energy products. So it uses natural gas to create electricity, and it's buying the majority of that natural gas from Russia. So there are a number of issues that Turkey is facing anyway, and this crisis is likely to make a lot of those issues much worse. So I wanted to give you an update on Turkey because I haven't reported on it directly over the last week or so because I've been focusing in on the Russian crisis and the impact of everything that's happening on the global economy. But I wanted to come back to Turkey because I think it's a really important part of the jigsaw that we're looking at for the global economy. It's in crisis and it is likely to go into recession, and we could see a collapse of the Turkish economy. So I wanted to provide you with latest data on where we are. So we'll be looking at the latest inflation numbers. We'll then talk about the current account deficit. We'll have a look at the Turkish lira because it's started to slip again. We'll then talk about the foreign currency situation in Turkey because that's been one of their main concerns over the last couple of months. I'll talk about natural gas and oil. I'll then touch on tourism because the tourist industry in Turkey is quite dependent upon Russians and Ukrainians. So that's obviously going to be an issue for 2022 for the country. I'll then go into a little bit of detail on credit default swaps and what the price of Turkish debt is now trading at, because credit default swaps give you a very strong indication of the likeliness of a country defaulting on its debt. And then finally today I'll wrap up with my summary and my view as to what I think is likely to happen in Turkey over the next 3 to 6 months and what the impacts of that will be for the global economy. So normally at this point in the video, I would ask you for a thumbs up and to subscribe. But rather than doing that today, I wanted to have a quick chat with you about Patreon. Now, Patreon is a service that's been set up for creators of a variety of different types of product, and videos on YouTube is one of them. And the philosophy behind Patreon is that it allows creators and their audience to be able to connect directly, and if you so wish, you can support creators financially to help them to create more content. So the reason that I've set up a Patreon account is that I want to expand the amount of product that I'm producing for YouTube. I want to go into more depth. I want to cover different areas. And it's tricky to do that because obviously we've all got financial constraints and I need to do some other things as well as YouTube. And by having a Patreon account and allowing membership to be set up, then that will give me the opportunity to hopefully spend more time making this sort of content and making this a full-time venture. So if you're interested in having a look, have a look in the description below. You'll see a link to my Patreon website. I've literally just set it up. So as it stands right now, whilst I'm making this video, I don't have any members whatsoever, but hopefully over the next few weeks, few months, I'll start to build up a membership. And what I'd like to do is really develop a community on Patreon. So be able to talk to you guys directly and find out what you would like to see more of, and also to help you with some video content that isn't going to be on YouTube, to share some other ideas, some investment thoughts, some business coaching, a lot of different things that I can offer to all of you who are watching this video. So go and have a look. If you like the look of it, that's great. If you don't, then no pressure. Carry on watching the videos on YouTube. Inflation in February increased year on year to 54.4%, which is the highest figure that Turkey has seen for 20 years. Consumer prices increased 4.8% in the month, which on an annualized basis is a lot higher than 50%. I've talked about annualizing monthly inflation figures on this channel before, and I get a lot of comments because there's quite a complex calculation that goes into working out what the annualized rate is. But if you do a simple calculation of multiplying 4.8% by 12, that indicates that the annualized rate would be 57%, but I know the actual calculation would equate to it being much closer to 100%. But the point of highlighting this is that the monthly rate is rising faster than the annual rate. So that means that inflation is continuing to increase. And the situation with regards to the other key metric on inflation, the producer price index, is even worse. The producer price index in February was 7.22%. So the annualized rate of that is going to be well above 100% and is certainly higher than the 54% that the country is showing for February. And the problem with the producer price index is that Turkey is a net importer of raw materials and goods, which it then manufactures and produces, and then it exports the finished goods. So the producer price index is really important for Turkish industry. It's having to buy things in before it can send things out on export. So as those prices rise, that means that the price that Turkish businesses are having to charge in the international markets is also going up if they're going to maintain their profit margins. So this is a really big problem for Turkey. And the actual 12-month figure for the producer price index is 105%. So it shows the problems that Turkey is having with regards to its industry. If we dig a bit deeper into what is driving all of these price increases, food and drink prices rose 8.41% in February, and furniture prices rose 7%. In addition to that, transportation prices increased 76% over the last 12 months. Now, the reason that I'm highlighting those metrics is that these prices impact everybody. Everybody needs to eat and drink, everybody needs furniture, and everybody needs transportation to go to or from work or whatever it is you're doing. So these prices are affecting all consumers in Turkey, and that means that people will have less disposable income, and therefore they can spend less on things that are optional. And these are the ingredients as to how you get to recession, because people have to contract their monthly budgets, they spend less, and therefore the economy starts slowing down and shrinking. And one of the big concerns here is that these February figures don't really include any impact from the Russian invasion of Ukraine. Russia invaded at the end of February, and we've seen a huge spike in a variety of different prices. So oil prices, gas prices, but also metal prices, raw material prices, food prices have all spiked over the last couple of weeks, and none of that is included in these inflation figures. So it's very likely that when we see the figures for March, which will include these price changes, that we will see inflation going significantly higher in Turkey. And that trend is likely to continue for the foreseeable future. Turkey have reported a current account deficit of $7.25 billion for January, and this is the highest level that we've seen for 4 years. Now, if you're not familiar with what a current account deficit is, this is basically the balance of payments for a country. So it's very similar to your checking account, your bank account, that you have money coming in and money going out each month. And at the end of the month, you can do a net reconciliation and you see whether you had more cash or less cash this month. So $7.25 billion deficit means that Turkey spent $7.25 billion more than it received in the month. So obviously, as time goes forward, if that current account deficit continues, then that means that the country is losing money and therefore they've got a problem. So a current account deficit is seen as being a current state of affairs. It gives everybody a gauge as to how successful a country is in terms of the money it's receiving and the money it's paying out. Now, the trade deficit in January, which is exactly as it sounds, it's the difference between trade in and trade out, was a deficit of $10.3 billion, which is a 235% increase. And that was driven predominantly by energy costs. Turkey purchased $8.8 billion of energy in January. It was a particularly cold month. We saw a lot of snow across Turkey, but also prices rose and the value of Turkish lira fell. So the combination of all of those factors meant that it was a particularly bad month for Turkey. Reducing the current account deficit is one of the key targets for the Turkish government, but their estimates of where the current account will get to by the end of 2022 are currently sitting at $18.6 billion negative. However, in a recent poll conducted by Reuters, a group of 8 senior economists estimated that they believe that the current account deficit for Turkey, taking into account what's going on right now with Ukraine, will be a deficit of 29 billion. Now, I mentioned that the current deficit is the largest since 2017, and just as a point of interest, after that particular deficit, we saw a major recession occur in Turkey. So the warning signs are here already that this is a critical point for the Turkish economy. As you'll know if you follow the channel, the Turkish lira suffered a significant fall in value in 2021. It fell 44% against the US dollar. And unofficially, it was reported that the Turkish central bank spent over $10 billion in December supporting the value of the lira. We've now seen some figures that indicate that it was more like $20 billion that the Turkish central bank had to invest to keep the price of lira somewhere around about 13.5 to $1. Now, the exchange rate remained relatively stable around that level throughout the whole of January and the start of February, but it was reported that the Turkish central bank was spending over $1 billion per week to maintain those levels. And it's estimated that the central bank spent over $3 billion in January, and that the figures have started to increase dramatically as the conflict in Ukraine has started to unfold, because this is increasing the price of a lot of commodities, and as Turkey is a net importer, it means that the value of the lira is falling as everybody's expecting inflation to increase and the economy to weaken. It's estimated that the Turkish central bank spent $4 billion 2 weeks ago supporting the lira and spent somewhere in the region of $2 billion last week. If we have a look at this chart which plots the Turkish lira against the dollar, you can see that the value of the lira has deteriorated significantly over the last few weeks. And it initially rose to above 14.4 at the end of February. Now that figure was brought back down, but we believe that that was because of central bank intervention, i.e. spending billions of US dollars in the market buying lira. But even with that action, it hasn't kept the value of the lira up, and we've seen a significant deterioration over the last week. And if we look at this graph, it shows the movement over the last week. So you can see a continued decline in the value of the lira. And we're now touching around 14.6 lira to the dollar, and that represents a fall of 10% since the start of 2022. And we think what's happening here is that the government is trying to slow down this deterioration in value, but it will get to the point where it will have to prioritise what it wants to spend its foreign currency on, and it's likely that it will need to spend that currency on gas and oil, and that supporting the lira will become a secondary issue. So we could see a significant deterioration in the value of the lira over the next few weeks if the Turkish central bank stops its support scheme and stops buying lira in the international markets. And one of the big issues here is that Turkey has a limited amount of foreign currency. It's been struggling for US dollars. It's introduced a number of schemes whereby it's asked its citizens to hand over their US dollar reserves. It's asked the companies in Turkey to hand over its foreign currency. And it's also been offering citizenship to foreign nationals in exchange for US dollars. So it's been desperately trying to gather in as much as it can. But unfortunately, with what's going on in Ukraine, it's likely that all of those dollars will need to be invested into energy, and therefore it won't be able to continue supporting the Turkish lira as it has been over the last few months. One of the problems for Turkey is that it is a net importer of energy, and natural gas is its largest single purchase. Turkey has focused heavily on renewable energy and moved to natural gas a number of years ago because it's cleaner and more efficient and cheaper than the old-fashioned coal-fired power stations. In terms of installed capacity, natural gas power stations equate to 28% of the installed capacity for Turkey. And Turkey is at the forefront of renewable energy, with over 50% of its installed capacity coming from a variety of sources, including wind, hydro, solar, and geothermal. However, it's had some issues with a lot of its renewable energy plants, and in 2021, 42% of all electricity came from the gas-fired power stations. So proportionately, it was using the gas power stations more than the installed capacity percentages. So there's a high reliance upon gas here. And the problem that Turkey has is it doesn't have huge reserves of natural gas. Russia has installed pipelines that supply gas directly to Turkey, and in 2021, 45% of all gas that Turkey purchased came from Russia. Now, Turkey have remained neutral in terms of their stance towards Russia. They have stipulated that they will continue to buy energy from Russia. They have a reliance upon it. It would be very difficult and very expensive for Turkey to switch its supply from Russia to the rest of the world, because it would then have to buy liquefied natural gas, which is more expensive because there's more cost involved in producing that form of gas, but also from a capacity point of view, it would be impossible for Turkey to be able to get enough supplies to be able to fuel all of its stations. So what we would likely see if Turkey did switch off its supply from Russia is that we would have blackouts all across the country. And recently we did have some blackouts. There was a problem with one of its pipelines, which caused it to shut down a number of power stations, and we had blackouts for a lot of the industrial zones. So that was quite a disastrous situation. So the Turkish authorities do not want to have blackouts. They need their industry to keep working because they're dependent upon exports to keep the economy moving. So there's a very fine balance for Turkey here. So it is going to continue buying from Russia. But the big problem that Turkey is facing right now is because of what's going on in Ukraine, energy prices have gone through the ceiling. So we've seen gas prices increase in multiples over the last few weeks. So that is going to hurt any country that has to import energy, but it will certainly hurt Turkey because it's highly dependent upon this gas. So when you apply that to the amount of gas that Turkey is taking, it's going to cause major problems from a current account position, from a cash point of view, and from an economic growth perspective. Turkey is also a net importer of oil, and it buys a lot of its oil from Russia. 17% of all oil comes directly from Russia, but 40% of all of its gasoline comes from Russia. So Turkey is highly dependent on this fuel source. And in exactly the same way as I've just mentioned for natural gas, the price of oil has spiked. And any country that has to pay to import oil is going to suffer. So this is bad news for Turkey. But then when you apply what's happening with the Turkish lira and the devaluation in its currency, it means that the country has less purchasing power in the international markets, and therefore it will cost even more to buy that oil. So the price has gone up already, but then when your currency devalues, that means on a real basis, it's even more expensive. So it's a double whammy for Turkey here, and this is all adding up to really bad news for the Turkish economy for 2022. Tourism is a major part of the Turkish economy. Turkey has a lot of holiday destinations, it has great weather, and is very popular amongst European travellers. And the tourist industry makes up around about 13% of the total economy for Turkey. Now, the Ukrainian conflict is bad news for Turkey for a couple of reasons. Firstly, Turkey is located geographically close to Ukraine, which may put off some tourists from travelling to the area. But more importantly, a big part of the Turkish tourism industry comes directly from Russian civilians and Ukrainian civilians. In 2021, Turkey had 24.7 million tourist visitors. And of that figure, 4.7 million of them were Russians and 2.1 million were Ukrainians. So 19% of the total number came directly from Russia and 8.5% came from Ukraine. So we're talking almost 30% of all of Turkey's tourists in 2021 came from Russia and Ukraine. Now, it's very unlikely that we will see those figures repeated in 2022. If we see all of those tourists disappearing and we lose 30% of the total tourist market for Turkey, then that is going to be absolutely disastrous for the Turkish economy. Turkey is set up to receive large amounts of visitors each year. It has a huge industry based on hotels and bars and restaurants. And that industry is also very seasonal. So within the summer months, they will take the vast majority of their revenue. In 2021, it's estimated that tourism brought in $25 billion to Turkey. Now that figure is still relatively low compared to $34 billion in 2019, which was the last full year that was not affected by COVID. So we're talking very big numbers here. And if we see a 30% fall in that figure, we are talking around about a $7 billion direct hit to the Turkish economy. But there's also the indirect hit. So everybody who works in the tourist industry, who has businesses relating to it, when they make profit from that business, they then spend money in their local economy. And we have the waterfall effect of direct spend from tourists, which then feeds through into the economy. And there's a multiplier that relates to every lira that's spent. So if you don't have those tourists coming, if they're not spending their international cash, then that means that you don't have that waterfall effect. There is no multiplier, and that's how you get a contraction in your economy. So the impact of Russia invading Ukraine is going to be felt severely by Turkey this summer. The price of a credit default swap is a very good indicator of the likeliness of a country defaulting on its debt. So I wanted to talk a little bit about that for Turkey here. But before we get into it, I'll just run through a very brief explanation of what a credit default swap is, because this is more financial jargon and terminology, and it's the sort of thing that you hear journalists talking about, and most people don't really know what a credit default swap is. So a credit default swap is basically an insurance policy that makes sure that you're going to get your money back on a bond that you're holding. So let's talk about Turkey as the example. So when the Turkish government issue bonds, they promise to pay back that money at some point in the future. So if we look at this example, this is a bond that was issued by the Turkish government, paying a coupon of 6% that's repayable on the 14th of January 2041. So you may have bought this bond a few years ago because you wanted to get paid the 6% coupon. So let's assume that you bought $1 million worth of this bond. So every year you would be getting paid $60,000 in interest. And you could sit and hold this bond for the next 19 years and be paid that interest. However, with everything that's going on in Turkey right now, you may have changed your mind and you might now be worried that you're not going to get back your $1 million in 2041. So you have two options. You could go into the international markets and sell that bond, but if the price of that bond is currently 75 cents on the dollar, you're looking at a $250,000 write-off. So the alternative to selling the bond is that you keep it and you take out an insurance policy that will make good your $1 million in the event that there's a shortfall in repayment from the Turkish government in 2041. Now that insurance policy is what's called a credit default swap. And it's called that because that's exactly what you're doing. You're swapping the chance of a credit default on that loan with somebody else. They're taking the risk, and the trade-off for that is that you have to pay that counterparty. So the credit default swap price is the current going rate, and it's the price of the Turkish credit default swaps that I wanted to talk about now. So the price of insuring Turkish debt in the international markets through a credit default swap is now 677 basis points. And 677 basis points in normal language is 6.77%. So if I want to sell the risk of my $1 million bond to an insurance company through a credit default swap, I will have to pay them 6.77% every year for the remainder of the bond. Now, comparing that to the terms of this bond, I'm only being paid 6% by the Turkish authorities. So I'm now making a loss of 0.77% every year on this bond. And the reason that I'm now making a loss is that the markets believe that there's now a higher risk of Turkey defaulting on its debt and not repaying that $1 million. So the credit default swaps are increasing in price for Turkey, and it's likely that that will continue as this war continues because it's increasing the price of everything in the international markets, and Turkey is a net importer. So overall, this war is very bad news for Turkey. The credit default swap prices give you a strong indication as to what the markets believe is the chance of a default in Turkey. And the prices are going up. So they've gone up in the last few days, and it's likely that they'll continue going up as this war rolls on. So what's the summary and conclusion today? Well, as we've discussed a lot on this channel, Turkey has major problems right now. The Turkish lira has been in freefall. It was stopped for a little while, but it looks like the Turkish authorities are running out of cash and the value of the lira has started to decline again quite rapidly. But we've got a bigger problem in Turkey, and it's inflation. And inflation is now over 50%. And when you look at what's happening month on month, the figures are getting worse. And those figures don't include any impact of the Russian invasion of Ukraine. And the impact of that in the international markets is that it has driven up the price of all commodities. So oil prices have gone sky high, as have natural gas, as have food prices, as have metal prices. And Turkey is one of the biggest importers of metal because it's got a lot of manufacturing and industry in Turkey. It brings in raw materials, it processes and produces things, and then it exports the finished goods. So as the price of all of those commodities rises, it increases the purchase price for Turkey. It also increases the need for foreign currency, which it doesn't have a lot of. And when you've got falling value of lira, that means it's even more difficult to get that foreign currency. So we've got a lot of different problems that are all coming to a head in Turkey right now. We were expecting that Turkey was going to struggle in 2022 anyway, because the economy was under severe pressure. But this war is going to make things much, much worse. It's likely that we will see inflation rising to 60, 70, possibly even 100% on a year-on-year basis over the next few months, because prices are spiking and Turkey has no choice but to keep on buying natural gas, oil, gasoline, all of the things it needs to fuel its economy. It has to buy in the international markets. So the increase in prices of all of these goods is an absolute disaster for Turkey. And it's running out of currency, and it's very likely that they will need some form of bailout. Now, they recently issued a sukuk bond, which was sold predominantly to the UAE, and they may decide to issue more of those bonds because they desperately need some cash right now. They won't be able to turn things around organically because they're a net importer. You can't change that overnight. It's impossible. They will also have to keep buying from Russia because their infrastructure depends upon it. It's not feasible for Turkey to start buying gas from elsewhere around the world. They just won't be able to get the volume, and also they can't afford it. They haven't got enough cash. So all of this is really bad news for Turkey, and I think we're going to see some form of crisis occurring in the country over the next 3 to 6 months. But clearly, I'll keep you posted on any further news and data and developments. If you've liked what I've said today, then please give me a thumbs up, and don't forget to subscribe if you haven't done so already. And if you get the chance and you're interested, please have a look at my Patreon page, because I'm really keen to develop a community of interested people that we can start talking about a lot of different things in a lot more detail. If you look at the comments on this channel, they are of a very high quality. We've got a lot of great viewers on this channel who've got great ideas and thoughts and bring a lot to the table in terms of adding extra value. And what I'm trying to do with Patreon is try to develop that and harness all of those ideas so that we've got a really strong community of people who are sharing ideas. Now, I will be setting up a Discord chat to be able to share our thoughts and ideas. So thanks for watching. I'll see you again soon.